Merry Christmas, motherfuckers. Throwing together a quick update video heading into next week. There's not really too much to update on. I just wanted to give my thoughts on everything and what I see going forward. Um, with that being said, let's just do it. So, first of all, S&P 500. Now, I spoke about the indices in my last video. Dow Jones having already hit all-time highs. NASDAQ already hit all-time highs. S&P 500 is very close to seeing all-time highs. Russell 1000 very close to seeing all-time highs. Russell 2000 is lagging behind a little bit, but is in the process of breaking out. Now, I've been saying in all my previous videos that I'm thinking SPY is going to pull back to 460 before we see all-time highs, and I no longer think that's the case. After the price action last week, as well as the synchronization with everything else, the way all of the rest of the indices are looking, I do not see a pullback to 460 short term here. So what I'm thinking is going to be the case is SPY is going to break this range to the upside and see all-time highs this week. Yes, I'm expecting all-time highs on S&P 500 this week. The fact that we haven't pulled back to 460 already and we've just been consolidating, I gave two scenarios a couple videos ago. I gave two scenarios. The first one being that we would just consolidate in this area here, 470s, before moving higher. That's without pulling back to 460. That was one of the scenarios. The other one was pulling back to 460 first before we moved higher. I don't think we're going to be pulling back to 460. And with that being said, I'm very confident that we're going to be seeing all-time highs on S&P 500 this week. And that's pretty much that. Now, I mentioned we have this level to break. It's the current 52-week high. It's the current local high here of 475.89. Closed Friday, 473 and change. We break 476 here. All-time high is going to come very fast. So that's what we're going to be looking for on S&P 500 is a break of 476, and then from there continuation to all-time highs. So that's really it for this. Everything's bullish. I mentioned in my last video as well, everything looks great market-wide. All the indices are either at all-time highs or very close to it. Blue chips, same thing. Crypto's booming. Bitcoin looks like it's about to leg up again. Looking at the chart right now, it looks really good. So that's it for SPY. Now, really quickly, let's get into AMC, and we'll talk about the macro first, as always. So you have your January and June equivalent peaks in the green and yellow here that you see here. So January, June equivalent, the V shape, and then your macro break in the blue box here. Then you get that little sideways consolidation pattern before getting into the downtrend. So that's the first bull cycle of AMC. And then the second bull cycle of AMC is the same story. January equivalent, June equivalent, V shape, macro break, gap down, the blue box, and this sideways consolidation here before falling off of a cliff into the downtrend. And then the downtrend is pretty much the same story. You have a macro resistance on both sides. I'm not going to really talk about it on this slide. I'll just get into the next. But the downtrend phase of AMC takes you pretty much to zero. Right above zero, you play out a flat portion, you break the macro resistance, which is also your fourth touch on it, and you straight line. There's no slow climb, Tesla type squeeze here. It is a straight line once we break our macro resistance. That's what we're looking for, a gap up. So we'll talk about the downtrend first, and we'll start here. So again, we'll just where I left off with the bull phases, this macro break gap down you see in the blue box here, comparably to this, the sideways consolidation pattern, and then falling off of a cliff into the downtrend. And all of the crosses of the 200 EMA are identical on both sides. This yellow line is the 200 EMA. So the first cross to the downside, your first bottom coming back up, is where you find your macro resistance on both sides. So come down, chop here, back up, rejection point, that's your macro resistance. Coming down again, your second touch, coming down again, your second touch. Clean rejections on the first two. And then all the way down to your flat portion is where you find it again, the fake out move. This is your third touch. Over here, same thing. You do not touch the resistance again all the way until that July move here. That is your third touch, the fake out, and then you pull back into the resistance for your second and third bottom all-time low. Your second and third bottom all-time low. Now, I mentioned before, and I'll say it really quickly again, AMC's macro sucks. It is January 15th, reiterating over and over again, breaking to the downside. In the downtrend phase of AMC, the bear cycle of AMC, just continuously breaking to the downside, forming lower highs and lower lows all the way until this point right here, which is your third bottom all-time low landmark. It's the lowest point throughout the entire bear cycle. And then in the current is the exact same story. January 15th breaking to the downside over and over and over again, lower highs and lower lows all the way through the macro to where we are now, our third bottom all-time low landmark. Though it might not be in, we are approaching this point in the current cycle right now. We are approaching our all-time low landmark right now. And obviously this bear phase transitioned into a bull cycle in 2021, and we are lining up for the exact same thing again. 2024 lining up for a new bull cycle on AMC, which also applies to a lot of other tickers, even indices. SPY lining up for all-time highs 2024. Previous all-time highs January 2022. So that's the downtrend. Here's just a different look at it with some triangles now. So it's all the same thing. The 200 EMA, same on both sides, same exact chart I just showed you. Just your first two rejection points here in the previous bear phase, first two rejections in the current bear phase. Then you don't touch the macro resistance again all the way to the bottom pretty much. You get the fake out move that you see here, the fake out move that we got in July, and then pulling back in for your second and third bottom all-time low. And then with that, all of the crosses of the 200 EMA on both cycles are the same. And then even at this fake out move, the third touch on the resistance, the 200 EMA actually pokes outside of the resistance on both sides. It pokes out at the exact same point in the downtrend. And then of course we're at our third bottom all-time low now. Although it might not be in, but that is the point at which we are approaching fractally. This is where we are in our macro right now, is approaching this point right here, our third bottom all-time low. And then again, January always has been 2021 bull cycle and AMC, and then again lining up for January 2024. So that looks good. Really quickly, this is probably the most important slide of the entire video. It's our macro resistance, our macro halt line, which is also something I forgot to mention when I was going through the downtrend cycle on both sides, is that the macro resistance of the previous cycle of AMC, we were not being halted off of this trend every time we touched it. There were 0 halts, as a matter of fact, on this trend all the way down here. Not one single halt as compared to the current cycle. The exact same trend line, exact same touch points, exact same crosses of the 200 EMA. It's all the same. The only difference here being we have halted off of this trend line every single time we've touched it. So halting here, halting here. We've had a few halts in between. This was a halt right here, getting pretty close to it. July, obviously, we halted the fake out. The point here being is that when we broke our macro resistance in January of 2021, we saw a straight line directly to the top, and we are expecting the exact same thing. Not only because there is way more volume in the current macro of AMC, the bull phase and bear phase, the volume is not even close to what we saw in the previous macro, but that's also confirmed with our macro resistance trend also being our macro halt line. The volatility behind this line is going to be absolutely insane, and we got a sneak peek of that in July, that 100% after hours move, which was a straight line, which took about 1 minute. And then pulled back in, and that following Monday we halted to pull back down for our second and third bottom all-time low. So the halt line now, and once again, this is the downtrend phase, the bear phase of the current macro. Lower highs and lower lows all the way down. How much I said lower highs and lower lows all the way down here. Big swings here. Initially in the beginning part of this downtrend, big swings up and down here. on relatively low volume all the way throughout this. And then where we are now, completely flat line, not even moving, very barcodey sideways, slow days here on pretty much all-time high volume and approaching our macro resistance line closer and closer every single day, moving to the right. And obviously zero is right below us. Now I do have two lines here right now. I mentioned in one of my last videos that I had the macro resistance line drawn two possible ways here, and these are both of the possibilities, the white line and then the red line being the more conservative. If it was actually the white line, it just depends on where you're running it over these wicks here. So the white line, this resistance line does make sense. I've been using the red line just to be conservative. This is like, you know, worst case scenario in the red, which really isn't even that bad because we're meeting it next week anyway. But if it isn't actually the white resistance trend here, we're meeting this next week. As a matter of fact, we're meeting it, I think, Wednesday or Thursday. We are very close to it if it is in fact the white line. And another thing with that is the white trend, by pulling it down over these wicks here, it actually touches its clean rejections off of this. The red resistance trend is not actually, these wicks actually do not touch it by pulling it up to hit these two top wicks right here. Pretty much the point here being is that we're at the end of the road for AMC. We are quite literally at the end of the road here. Just zooming in on this now, and here are both of the trend lines. The white line, which kind of feels more like this is actually our macro resistance now with the price action that we're getting here, and then the red line is the more conservative one, which still is a week away. And then we have our micro resistance trend here in yellow, the resistance we've been dealing with for the past 4 months here, which is, I mentioned, pretty much irrelevant now because it is converging with both of these macro resistance trends. So it's really not even relevant anymore because this yellow resistance is now acting as the macro resistance. So again, we are at the end of the road for AMC. Zero is right here, this bold red line. And we're really getting pinched down here. I mean, it's do or die. I mentioned in my last video, it is literally do or die for AMC. We either reject off of our macro resistance trend that we head for zero. And by the way, both of these resistance trends are intersecting zero this month, or sorry, January, which we're pretty much in January now. So these resistance trends are intersecting zero this month. So it is, the two scenarios here are we reject off of these trends and go to zero, or we break them to the upside and see that straight line volatility to the moon that I was just talking about. Now, I don't see a world where AMC goes to zero, so that makes this it makes it very simple. We're squeezing, and we are quite literally at the end of the road here. There's nowhere to go. It's possible that there is some more downside here, especially if this white trend is the macro resistance. We'd be probably expecting more downside tomorrow. Which really isn't a big deal because I don't even think we're going to be uptrending into either one of these resistance lines. I think we're just going to gap up very similarly to what we saw in July. So I think that's most of the charts I wanted to cover. I do want to go over one more thing though, and I'm just going to make this clear right now before I even click on this. I do not use Wyckoff ever. I'm not that familiar with it. I just, you know, for trading this flat for 4 months and then breaking to the downside here, to me, and I really don't even know much about Wyckoff, I'll be honest about it. It feels like a spring. So what I did was I was like, all right, you know, let me pull up a Wyckoff accumulation chart and look at it side by side with what we got going on. And sure as shit, it's picture perfect. So here is just a template of Wyckoff accumulation versus AMC the past 4 months here, and everything's marked. So PS, preliminary supply, I believe, selling climax, automatic rally, sell test, and then you get your push towards the top here, which is your resistance, which would be the equivalent of this, and then pulling back down, actually forming a slightly lower low than the selling climax, which is what you see here, and then bouncing up to the automatic rally, which we didn't do that here. But the movement is pretty much the same on both sides here. We just didn't make it back up to this level here at $9 because of the macro resistance, because of how tight we are getting pinched down here, and then the spring breaking below the support level is where we are now, looking for excuse me, the markup phase, which I mentioned. I don't think it's going to look like an intraday uptrend. I think we're going to hit a point here in the spring and we're just going to gap up a straight line the way we saw in July. And I'll get into that in a new slide. The point here being is that this is a picture perfect accumulation on AMC here. And then looking at this side by side with the flat portion of January 2020 to 2021, exact same thing. So everything's marked again. Preliminary supply, selling climax, automatic rally, sell test, all the same on both sides. And then on both sides, you get this double peak move. So it's basically a tri-peak in the middle, and then you have a tri-peak lower at the end. And it's the same over here. So the tri-peak in the middle coming down to support the tri-peak at the end on both sides, and then your spring is the lowest point in this range, and it was back here as well. Although it was not much lower than the selling climax, it was lower. This would be the spring equivalent of the previous flat portion, from which you reclaim support and then you just gap up. I don't think we're going to be seeing all of this uptrend here intraday. I think we're just going to gap up in July, and I'm going to show you why in the next slide. But it's pretty much all the same here. Same touch points. This tri-peak actually did make it up to the automatic rally, where this one didn't because of the macro resistance trend. And that's it. It's the same exact thing. I don't know how else I can show this. And we're coming off of the spring right now. So, you know, we are, the next time we form an uptrend here, if there even is one intraday, that's it. There's nothing else. It's just uptrend into the macro resistance, break it and squeeze. Again, that's if we even see an uptrend intraday. I'm leaning more, we're just going to get a gap up, a straight line to the top, the way we saw in January 2021, without all of this uptrend, especially if the macro resistance is this red line. Again, this is the scenario 1 for macro resistance, and then the black line is the one I've been using. It's the very conservative trend. I've just been using this one, but it kind of feels to me like this red resistance is the one, especially with the way the price actions have been behaving here on the spring. But I guess we'll find out if we uptrend intraday into it. But you know, the point here being is that AMC is just, it's repeating iterations, repeating fractals. So here was the flat portion of 2021 that led to the squeeze in January, which was played out right above us from January 2023 until present day, where we broke down in July. It's the exact same iteration here. So your first bottom that you see here, you have the big tri-peak in the middle that you see here, come down to your second bottom, and then you have the smaller tri-peak after that, which you see here, and then this wick here this is when we were looking for our third bottom all-time low. We were looking for a lower low here that we never got, but that is the third bottom equivalent that you're seeing here. We formed a slight uptrend from that, and then we just gapped up. That was the fake out move. So this is a flat portion right here that you're seeing right here. Of course, we didn't actually squeeze here, and then we halted on that Monday to come lower. But the point that I'm showing you here is that we're playing out the exact same iteration again right here. It's just playing out much faster and in a much tighter range. So that would have been your first bottom here, your tri-peak, the big tri-peak in the middle, your second bottom, and then the smaller tri-peak here, you can't even see it. That's how tight the price action is. I showed it on the last slide right here. The smaller tri-peak compared to this one right here. The price action is so constricted, it's so coiled here that you can't even visually see it unless you zoom in. But this would be the bigger middle tri-peak that you see here and that you see here. And then you have your second bottom and then the smaller tri-peak in the middle here, and your second bottom here, the smaller tri-peak in the middle. It's the same thing right here, but the price action is so coiled that you can't even see it. So pretty much the point being here is that, fractally speaking, we are approaching our third bottom all-time low right here, looking for an uptrend and a squeeze. Is also the same as this third bottom all-time low that we never got, but it was close, but it still serves the same purpose here. Our third bottom, and then the squeeze, which really was a fake out here. Now we are looking for the squeeze, because if we don't, we will be going to zero. Um, that's the great part about this, is that we'll know by the end of January. Like I said, our macro resistance is going to be intersecting zero by the end of January. So we're either going to squeeze or we're going to zero. There's no other options. But yeah, like I'm just showing the Wyckoff because, like I said, this price action right now kind of feels like a spring. I never use Wyckoff. I was just showing it. I Googled it and I pulled up the price action side by side, and I was like, sure as shit, there you go. And that's a picture perfect accumulation. And also keep in mind, all the people that are screaming dilution and AA fucking sucks and all this bullshit for diluting shares here. We saw dilution all throughout this in the 2021 squeeze here. Prior to it, there was multiple points here where Adam Aaron diluted the float, and it's the same thing we're seeing now. It feels like every other day he's diluting shares. This happened back here right before we squeezed in January 2021. The exact same thing. So that is pretty much the point that I was trying to get at, is that we are playing out another flat portion here. Approaching our macro resistance, and at the same time coming off of a spring, if you're looking at it from Wyckoff theory, or if you're looking at it fractally, we are at our third bottom all-time low, this point right here, which was a spring as well, looking for this uptrend. Same way you see this was a spring here, this just didn't come as low. This was a pre-market wick down, but still serving as a spring here, and then the uptrend out of that, the volatility. And, we are getting very, very close to our resistance here. Keep in mind, 7 trading days post-OPEX is next Wednesday. So not tomorrow, but the day after is a potential peak target. Now, I'm not saying that we're going to be peaking on Wednesday. I'm just pointing that out. I mentioned both January and June squeezes. The peaks of them landed 7 trading days post-OPEX. I'm just pointing that out, that our next OPEX peak target is this Wednesday. That's not to say that this doesn't run into January and we peak sometime in January. It really just depends when we gap up. Now, I feel like I'm rambling, but so be it. I don't think we're going to be seeing an uptrend here intraday. I can't really see it. It's possible. Maybe tomorrow we come a little bit lower on the spring and then we start uptrending for a day or two. This would be ruling out the peaking this Wednesday, 7 days OPEX, but let's just say for shits and giggles, we were going to peak this Wednesday, what that would look like. We could gap up tomorrow. That is a possibility. I think it's probably one of the more unlikely scenarios. Or we could have a deeper spring tomorrow, have another red day tomorrow, and then we would just gap up to the top between after hours and pre-market on Wednesday, which would be very drastic, but it makes sense. Very fast after a holiday. Not really any chance for FOMO there. It does make sense. But if we don't peak this Wednesday, this has to be sometime in January, because if it isn't sometime in January, like I said, we're going to be going to zero. That's if we reject off the macro resistance. I don't think there's any intraday slow choppy uptrend outside of the macro resistance. It's the same way we saw in January of 2021 when we broke this and saw a straight line. That is definitely what we're expecting here, and a higher price target with that. So that's pretty much it for the video. A lot of rambling. Everything looks good, and it's time to start getting excited about AMC price action, because this thing's going to be taking off very shortly. We really don't have much runway to work with. We're really getting pinched down here and approaching our macro resistance closer and closer every single day. I believe the conservative macro resistance here in red tomorrow, the actual price of it is 850. By Friday, this red macro resistance will be sitting at 720. And then next week, it'll be in the $6 range. This white trend here will be $5 by end of week. Pretty much the point here is this is do or die. It's now or never for AMC. Which, I don't see a case where we go to zero. Like I said, it's a shitty macro. Everything else is synced up. Everything looks good. GameStop is about to fucking rip. The rest of the meme basket's about to rip. Everything else is about to rip. And indices are going to see all-time highs if they haven't already. They're going to be seeing all-time highs very soon. Like I said, S&P 500 very well might be seeing all-time highs this week. I think that's it for the video. I hope you guys enjoyed your weekend. I hope you guys enjoyed your Christmas, spent some time with your family, got some time away from the market. But it's time to get back to work, and we're very close, guys. We are very, very close to seeing some fucking absolute madness in the market. That being said, I will catch you guys with some update videos this week. Let's fucking do it.